The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, how did the market trade fare on Friday as we headed into a long holiday weekend with Labor Day on Monday? We have plenty to discuss, and joining us here today to provide market analysis, we welcome in our good friend DuWayne Bosse with Bolt Marketing. DuWayne, always good to talk with you, buddy. How you doing?
You too. Good. It's a Friday in the Midwest, right in the fall. So of course I'm good. I apologize for my getup, but I am totally ready to go coach some football and watch some youth football. So like everyone else, it's a fun Friday afternoon.
Hey, nothing wrong with that. You know, I look at it this way. Friday Night Lights is underway. College football season's here, and NFL is back here this next weekend as well. So I'm excited. I know where my weekend's priorities are going to lie here for the foreseeable future.
Reviewing a lot of markets. Yep, just like me. Yeah,
exactly. Reviewing a lot of markets. So I suppose we should probably do that here today before things get underway too much with football season. Overall, okay, Friday we started a new marketing year. Officially, we are in the 23-24 marketing year now, and it's the start of meteorological fall harvest right around the corner. Really, though, heading into that holiday weekend, we got a little bit of early money flow, it felt like, from the new month. You know, that's typical, but just kind of felt like a malaise, the holiday trading in effect by, mid-session on Friday, and overall, just kind of drifting into the holiday weekend in this grain trade, DuWayne.
We are. Sadly, we get to these holidays, which this one almost coincides with an end of the month as well. Traders start to go to the sidelines early and earlier to avoid these holidays. And I find myself doing the same thing. I don't feel like I'm a really large spec trader, but still even farmers, hedgers, guys just kind of start to go to the sidelines sooner than later. And today felt like just a position squaring day, didn't it? We were down earlier in the week on corn, soybeans, and wheat, and sure enough, they're all trying to be higher today. Wheat struggling just a little bit, and there's news out there, but it didn't feel like it was driving the market a lot. So you're right. I think a whole lot of position squaring today before the long holiday weekend.
Well, and there's plenty of news items out there. You alluded to a few of them. I think I heard a lot of this at the Farm Progress show, folks talking about the heat and the dryness and what it could do to harvest final yields and really rapidly maturing a lot of this corn crop across the country as well. Some talk that harvest could get underway even next week in some areas. So I think that's on one side of this coin here as well, is just what is this weather going to look like here going through the holiday weekend. It felt like a lot of funds did want to be long this market with a 3-day weekend.
Yeah, absolutely. This heat and dry finish of the crop is almost a little bit of an old story. We keep thinking it's going to change and rain eventually. And on Thursday, we did see a little bit in the extended forecast, both the Europe and the GFS model. It has some rain for late next week for, I'd say, more the Illinois, eastern Iowa area. But you're right, hot, dry finish of this crop, that's going to push it, which will reduce yields a little bit. So we ran up earlier on talk that, yields might be a little bit lower, but you mentioned, harvest is right around the corner. Really hard to rally these markets as you start to harvest. A great example, I think, is the soybean market. Got to just over $14 on ideas that the Pro Farmer put out their yield estimate below 50 bushels an acre. But to go above and beyond that, Jesse, I think it's going to take USDA printing and proving that, yes, that yield is below 50 bushels an acre. Because, in a couple of weeks, we start harvesting. And even if you think that ending stock is 150 or 200 or zero for an ending stock, you think we're going to run out next summer. We won't run out of soybeans in a couple of weeks, will we? Harvest gets underway. It's really tough. You'll have new fresh supplies. You also got stories about the Mississippi River water levels getting lower. That's increasing the barge freight costs, which makes us less competitive in the world market. So, we've got this not ideal finish to the crop here, production wise, maybe robbing us of some bushels, but we got some other negatives on the other side that are adding bushels, it seems like.
Yeah, and that other side is the demand picture, and I feel like that this situation's not improving. China buying some more beans from the U.S., but not as much as you'd think when you're starting the fourth quarter each year. This is kind of our export window for beans. They're still buying a lot from Brazil. There's talk of the restrictions on the Panama Canal, increasing some of the freight rates and more for U.S. Gulf supplies to get to China, and so they're just going to Brazil. I mean, and corn's been export demand's been poor. So I mean, you're right. Demand is kind of it's almost like the weather should have made us bullish, but demand is making us bearish, and the two are canceling each other out, DuWayne.
Hey, oh, you're 100% right. As we close the book on the maybe supply side questions of the year, where we're wondering about yield, the yield might be dipping just a little bit, but there's this window of where the yield bushels are going to come in per acre, right? And it's narrowing. We're getting an idea of what it is. And you're right, we shifted then the demand side of things, and that's not a pretty picture. And we're not the only ones saying that. There's a lot of brokers, a lot of experts out there talking about this export demand does look poor. I was feeling that our soybean demand was coming around, though. All these daily sales announcements you're announcing, I'm hearing, and gosh, okay, we're doing well. And then I did the math this week. Yeah, we've had some nice sales lately, some nice weekly sales. We're still not catching up to the pace. We know we started slow, and we're still not catching up to the normal pace, Jesse. And I was like, when I did those calculations, I was a little depressed because I thought, well, soybeans are coming around, but they really aren't. This is the time of year where we're supposed to see big export sales. But you're right, they're not big enough. And their 100% reason is Brazil's got too big of a crop. Now they're switching and trying to export a lot of corn out, which that's another problem. Corn export demand is really poor, the pace. There's some people talking about when we shift the watching demand side of the corn market, you could knock off 700 million bushels of demand off corn. And I'm in that camp. You could, because you can combine poor exports. USDA also has feed usage up sharply next year, and I'm not seeing the increase in the herd size, so I don't know if that's going to happen. So I hate to sound like such a bear on a Friday afternoon, but it's hard for me to get bullish here.
Well, and you mentioned Brazil ramping up their corn exports. And as we close the book on the 22-23 marketing year, Brazil officially taking over as the top global corn exporter at 32%, ahead of the U.S. at 23%. So right there, I think that illustrates just how big of a player Brazil is in this market. And you mentioned to me as well, it's something that I've neglected to really harp on here on the show, but Mato Grosso, they're planting. That's another big storyline, DuWayne.
That's a big storyline. I saw the headline overnight as well. Kind of like us, they have their insurance, which the government kind of does their crop insurance, and they have an early plant date, which is really important in South America because that's when the rainy season comes. They don't let them plant beforehand because they just know it won't come up. It'll be a disaster that the crop insurance will have to pay on. Well, the rains came early this year, and Mato Grosso, which is one of the top producing states in Brazil, they let them start planting 15 days earlier than normal. Well, what does that mean? Then typically you can assume harvest will be a little earlier, right? Well, what does that do for us? That narrows our export window down. And we just talked a minute ago how we're not catching up to the pace. We're behind pace. And now this morning I'm finding out our export window might be narrower, as long as they, of course, have a good crop and that we got a long way to go. But man, this bearishness is snowballing on us a little bit. I mean, yes, we saw some green today on the screen, but you come back next week, it's just really, really going to be hard for this market to rally above $14 right now.
I would totally agree. And I'll lump wheat in here as well. I mean, a different picture, global picture there, but just poor trade in this wheat market. I mean, the U.S. is still not competitive with cheap Russian wheat and more. And, wheat can kind of be a boat anchor at times, I think, as well on the quarter soybean market, DuWayne.
It sure can be, and it kind of starts with Minneapolis wheat lately. That's the one that's really been tanking, and I know exactly why. My office is in Northeast South Dakota. My farm, we don't raise any spring wheat, but around us there's some, and I got to tell you, guys are shocked with the yield A lot of 80 bushel an acre spring wheat. Don't know where it came from. We had a hot, dry June, and spring wheat, of course, is a cool season grass. So the crops didn't even look that good, hence the poor crop conditions. I don't know where it came from, if it's technology or not, but it was pretty good yields. Now, there's going to be somebody out there saying that their wheat field was horrible, and there is those cases, but I'm just going to say that there's more wheat out there than anticipated, hence the bad basis, hence the futures market coming down. And I'm talking bearish, Jesse, but it's not all bad. Maybe if we pull these markets down cheap enough and the US dollar maybe pulls back a little bit, maybe we find that export demand and start to build it again. I think that's what needs to happen if we can return to being bullish in 2024.
We're having a conversation today with DuWayne Bosse of Bolt Marketing. And DuWayne, corn beans, real quick here. You think of new crop corn, December 23 corn, we're hitting that 480 level. Novi beans, we're 1370-ish, we'll call it. Are you getting aggressive here, putting any hedges on, making any moves with these price levels here and trying to protect some downside risk?
I still am. Luckily a lot of guys did it sooner, but when you talk nation average, actually the U.S. producers very undersold, it sounds like, going into this harvest. So the question, if I get called and asked, I've got nothing sold, what do I do here? Well, first off, that's still a very good bean price. 1370, there's nothing wrong with that. So just some straight up cash sales, as long as your basis is still good, just sell it, because I think the basis is going to get worse. There's going to be a lot of farmers selling this winter, Jesse, on any pops, especially soybeans. Higher interest rate, higher carrying charges, just equal farmers will just let it go. And that's the crop they like to sell, generate the cash, and then store the corn. So yeah, we are still being aggressive. On the corn side of things, I think we're range bound until USA starts to show this poor demand. So, put options are maybe not a bad strategy there. Gives you the upside, because obviously you still want upside.
Yeah.
If you didn't sell before when prices were higher, you were stubborn and a bull then it's going to be hard for me to convince you to sell it here at the market. And it's probably more of a break-even price for a lot of guys at best. So maybe put options with upside. But it's still worth protecting this stuff, Jesse. I mean, if I'm right and soybeans start to pull down and say they got to get to like a 1280, 1260, corn could go down to 420 yet, which I've been pushing for quite a while. So that's still a pretty big drop and worth protecting.
How about D's 24 corn and Nov 24 beans? I mean, we're talking $13 beans and a little over $5 corn on the board. If folks are starting to lock in some inputs for next year, are you locking in some price targets there potentially for 24?
I was going to say no to that question because I'm not thrilled with the market price, but you nailed it when you said if you're locking in the inputs. If you're locking in the inputs, well, you're locking in inputs because you like them, and you probably like your profit margin, so then you better lock in some of those fall prices then too. I'm not crazy aggressive here. If I had to pick one, I'd be more aggressive on the corn side at 510 than the beans. That bean situation is still pretty tight, and all it takes is a little weather scare in South America. Argentina is still dry. They are forecasting some rains now, but beans could still take off yet. So I'd do the corn first.
All right. Well, let's shift over to the livestock trade. Good discussion there in grains. Cattle and hogs, fairly mixed on Friday, heading into the final grilling season weekend, big grilling season weekend of the year. With Labor Day, and really, I just felt like choppy trade again in cattle and hogs to round out the week. And I know with this cattle market specifically, I mean, we know that herds are tight. U.S. and Canadian cattle herds down 3% through the first half of this year compared to last year. Some new data out Friday as well. So, I mean, you look at this cattle market, DuWayne, where do we go from here? I guess that's the question right now.
Yeah, for being near all-time highs, it's kind of a boring trade a little bit, which is okay. Because normally markets, when they hit the high, they're there for a split second and gone. So if I'm saying we're near the highs and it's a boring trade, that means it's just kind of going sideways, and it is. And I think it keeps going higher from here, Jesse. But I am just a little concerned. I'm not the bull I was several dollars ago. Now at this level, I'm starting to wonder about calling my feedlot guys and go, maybe some put options, maybe some LRP insurance, just I'm friendly. And then that usually makes clients go, well, I'm not going to buy it then. But if you want to manage some risk, remember, brokers can be wrong. I tend to prove that daily. It's just a very high price. But it's tight supply. I don't see that changing, Jesse. Cutouts are good. Demand seems good, but there's just that concern that somewhere, maybe we do pull back into recession. These credit card bills are higher. Now gas is starting to get higher. Crude's taken off today again. And so I'm bullish cattle. To answer your question in a long about way, which I always do, I think it's going higher, but I'm cautious.
Well, and you mentioned locking in some of those feed needs, and I think it's kind of maybe the same thought there on the grain side. If we're talking locking in inputs for your cattle, and if you're looking at some balance sheets, if you lock in some feed needs here, maybe if you have it penciled out to lock in some hedges and cattle at these levels, DuWayne.
Yeah, same deal. Yep, you're right. If you're locking in part, you better take the other one. And that's maybe where my concern is in the cattle market. Is I'm the guy who's pretty darn bearish the corn market, maybe bearish the corn market for a couple of years if we don't have a national weather problem. It's really hard to have really high priced cattle and have cheap corn. It just usually doesn't correlate because it usually equals higher weights, and that becomes a problem. But our weights have stayed low. We're current with the market, so bullish for now.
Well, DuWayne, how about that hog trade? That's we've seen that really change the dynamic here in the last week or two. Cash index has worked its way down towards front month futures, and now only about a $5 spread between front month and cash. So, what's your thoughts on the hog market?
I look for more of that to continue. It looks like the cash and cutouts are tanking hard and quickly here. It seems like $1 or $2.50 a day now here this past week. So that's going to converge down to the futures market. The futures, though, are kind of suggesting, tell me they're where they need to be. And there's smarter people than me that trade this hog market, which is a difficult market to trade, that are, saying that the D's around that 74, 75 is where we'll end up cash wise. And I'm hearing the same thing too. I think we have enough supply the end of this year. Hearing little rumblings that 2024 will be a little different in the hog market, that, there's not the expansion going on we thought. Some barns will be left empty. The higher interest rates don't help that either. So might be a bullish story in 2024, but I'm not an expert there. It's just I'm listening to the rumblings, I guess.
Well, fair enough. How about the outside markets? Crude back up around 85. Stock market relatively quiet on Friday heading into the weekend, but obviously a lot of the worries in the outside market spilling into the grains and livestock. We had a better than expected jobs report Friday morning, but then the Cleveland Fed president came out and made some hawkish comments midday, and that kind of took the steam out of the outside market, it seemed like, to wait. I don't know. I guess I throw it all that at you to say, seems like more of the same in the outside markets right now.
Yeah, it's funny. I didn't hear about the midday comments, but I laughed because I'm like, well, that sounds about right. Because the jobs report number kind of suggested that things are working and maybe we don't have to increase interest rates anymore and got things kind of going. And then of course you got to get the offsetting comments later on in the day. The crude oil is something I'm definitely keeping an eye on here. Forever we were choppy at $74. Now all of a sudden, in a blink of an eye, we're at 85, 86, and that's a good thing for the corn market longer term, I think. But yeah, so I'm going to keep an eye on that and see. Maybe the corn market's going to find a bottom sooner than I think with all these outside things, a smaller soybean crop, a higher crude oil market. But we'll see. So yeah, that's what I'm watching, the outside markets, watching the crude oil, seeing how high it can go. Not crazy bullish. I think the news out of that was that Russia was going to back off of their production. Saudi Arabia will probably follow suit into October. They're still talking production cuts. But you know how these futures markets trade, that'll trade the news and then the facts could be a little different. So be careful.
Yeah, exactly. Nope, that's a great point. Buy the rumor, sell the fact is the old adage I hear. Yeah. Before we let you go, DuWayne, any final thoughts? Anything else you want to reiterate to folks here as we head into the month of September, get ready for fall harvest?
Yeah, I know these prices are well off the highs, but it doesn't hurt over the weekend to push the pencil a little bit, and there still might be some profits worth protecting. So if you are that guy that hasn't done any marketing, do that this weekend. I think you'll find out these soybean levels are still pretty good, even though I'm telling you that has the bullish story yet. But a dollar drop could be painful, and other than that, got to stop the running game to win a football game. So that's kind of where I shift to.
Well, we'll let you shift your thoughts over to that football game plan there and stopping the running game. And as well, if folks want to reach out to you at Talk Markets, I know they can get a hold of you very easily. How can they reach you, DuWayne?
Yeah, they can call us here directly anytime, 605-448-2365. And they can always check us out online at boltmarketingllc.com.
With that, DuWayne Bosse, Bolt Marketing. Always appreciate the time, my friend. Have a good one. We'll talk to you soon.
Sounds good. Thanks, Jesse.
That's going to do it for the show. Find us online, markettalkag.com. I'm Jesse Allen. Have a great Labor Day weekend.